Welcome to TradeTheMBI.com. This is John. This report is for the 9th, and we'll go ahead and look at straight out the MBI Opus. This was the futures strategy that trades two contracts. We had both the Rainbow Hawk, Iron Hawk, and we talked about how it closed out there at the 78-ish range. Not bad. And then New Eagle Hawk has just come in here at the slight dip because we had cyan under red. That seems to be shifting just a little bit. We got a little bit of fear going on with this North Korea issue. Go ahead and take a look at the performance report of this, because we have this one, and I also show a secondary one that runs a lot. And so going back through here, we're right close to equity highs at this particular point. Returns for the year so far on just this very slow just under 75% win rate, 2.2 profit factor. Can't really complain about that one. The second version that I use is this one, where it was a little bit more singular entries. Here was the Iron Hawk, right around the same spot. It ended up getting nice at that 85.50, which was a target range that we were looking for originally. We've since faded back from there quite a bit, so it's been a pretty decent sell-off right at hitting that key resistance point. I knew that the 85 range was going to be it. I thought that if we could close over it, though, that would have been enough to propel us to the 25. Did not happen, so we had to wait a little bit longer on that one. This one is, let's put the performance report for it up. 2.22 is the other one, almost identical, a little bit less amount, bigger win rate, because fewer trades. And it's interesting because right here, a little over 500 and some trades, and I began using this one earnestly back here in 2009. It was just after the meltdown, and it's just interesting because the effects of the Fed really getting active in the quantitative easing really created some problems for the program, where we had a very consistent arc when the government really wasn't active in the quantitative easing aspect of things, and it's made it more challenging going through. There's no question about it. You can see the effect of that, because we didn't have as much of that until a little bit later on, and it really started taking hold here by the time we got to 2012 and that, and sure enough, really impacted the trajectory. But we were at a ridiculous angle here. I mean, that was a phenomenal. Returns for this one a little bit half of it, because it's only just trading about half the amount of time. So that's to be expected, but needless to say, still quite excellent for not having to do a whole lot of work. There's no question about that being an effective way to do it. So here we can see from the daily, so we started up here, we started ramping up. The difficulty I think you got here was the rising in the Azure. As we can see, once that starts to plateau, and I look for it to get above that zero, once it does, I think it's just a fraction under zero. If we look at that, yeah, negative 0.27. It gets harder to sustain the rallies without significant reset. And we've got that. I mean, you have the red, you have the crossover we had happen over here. That led to a little spike, but what we didn't get, and this is what I warned about back over here when we had the opportunity, we didn't get the orange reset underneath, and it wasn't enough to provide us an impetus to really shoot dramatically. And so, not our fault. There's nothing you can do about it. It is what it is. And you just, as my lovely wife would always say, you get what you get and you don't get upset. And there's the NQ, still behind, but almost identical as far as DOC structure. And a little bit of this slide back is Euro giving back just a little bit. It's gotten a little crazy, and this is our first DOC spread from it actually taking place. Yes, you have a reset of steel, so could be mitigated on the decline, but needless to say, that is definitely what we look for from a sell standpoint. So, you know, it wasn't enough to just have the orange get above the 13.5 when you were this far below with the cyan. It literally, once the green dipped below, you actually had your first inklings that things were starting to go south. I was looking for a pivot of the cyan above. The previous one over here didn't happen there. Starting to take place here. We'll see if it has any strength to it. The saber rattling always throws a little bit of a monkey wrench because most people don't anticipate it in this particular case. Nobody's excited about the concept of, you know, a preemptive strike against North Korea, and that seems to be a lot of the talk. So that would certainly throw an upheaval into what has been a supremely easy market ride. A little bit more reasonable behavior here from TLT, at least the Treasury's giving back a little bit. We're starting to see the same DOC spread. So who knows, maybe enough of the psychology of all this negative talk on the markets having some impact, and we had the little blow off right to the resistance at the ES 85 level. I doubt it though. USO, because at the end of the day, the numbers are still churning out very effectively for the economy at this point. So any future indications definitely going to tell us, and oil is certainly one of them, because even with the supply glut, if we start to still see a continuation, that means demand is rising. And if we've got increased demand, I think that some traders are going to pre-hedge that to want to get in and lock in before things begin to really take off. Gold, yeah, that little saber rattling right to our resistance point here on the ABM green, and then right back up to it. That's still in a fairly weak position at this particular point, but you can see shorts way over the top now on gold, and so we've got a complete reset here that's going to give an opportunity for a short squeeze rally. And actually, if we go back to there, I mean, I had talked about the Fibonacci to 50% levels, but I don't even think we got there. Probably only got to the 38 was the other one. But see, this is where it's important with the ABM green, slightly above where that was. So people are looking for that breach point. Not going to happen. So when you hit the green, for me, anything moving back above that 23% line there, or in my particular case, going up to the white ABM line, would have been an entry point for adding to anything. I was good with my entry down at the bottom, so it didn't really require anything. But needless to say, it's always good to see that from a broad perspective. Let's shrink this 5K, because this was a fun day. We finally had something happen. You know, I talked about this for the last few days, that you can't get too complacent thinking that it's going to be boring, because just when that, you know, starts to build, they've got enough consolidation and things start to move. We got the standard buy of the orange dip below the red DOC after having had the crossover. And a little elevation in the steel was, you know, not looking horribly, but still, it was rather elevated. You knew there was going to be some retrace back in the short-term buyers, but that was fine. Led to a couple of flat bars, and then it really started to take off. And then as it started to take off, you got to the huge red above 13.5, green up there, and then you had orange breaking above it. Normally, you would just say automatic short on that kind of situation. It's a little bit tougher when you have the cyan that deep in there. The advantage is that when you have steel breaking this far below, you can jump early, but oftentimes what you get is that will fade across, dip just modestly, usually to the ABM green, and then it comes right back up. It wasn't until we ended up with the DOC spread that you had the full confirmation that this was going to continue to slide, and sure enough, it did exactly that, and just filled it back in. It was still decent from a day trade standpoint both ways. It was very nice. It's good to see. This was a very normal rotation angle on things. I wasn't too thrilled with this setup here, but we got to the minus 25, and whenever you have that, usually you get a bounce through, and the fact that that bounce through did not hold up was mostly due to this whole North Korea stuff, and I think that's caused a little bit further slide. I think the secondary one on a higher red DOC should propel things right back up to the even, so effectively just kind of shook out a little people. And that's what markets are designed to do. So all in all, it's good stuff. We're finally getting some more range. I think that this kind of little geopolitical things are always good, because it really will upset the apple cart. And we were expecting volatility to finally start getting into some bigger ranges, though this is still not anything to write home about. I mean, come on, you're talking about the potential of, you know, armed conflict, and you're getting, you know, 6-7 point moves, you know, when you're at these levels. It's like, are we even registering anything? So not my idea of some of the dramatic ranges of 50, 60, 80 points in a day that we used to get, but that's all right for now. It'll change, particularly if any additional developments. I mean, now the threat of attacking Guam and stuff like that's always exciting, but at the end of the day, talk is cheap, and as long as nobody is dropping bombs anywhere, then markets should continue to rally. As always, though, trade well. We will talk again later.